Hello and welcome to Explain the Charts, your go-to channel for detailed market analysis. Today is November 24th, 2025, and we are diving deep into the USDCHF pair. We've seen some very interesting moves lately, and the fundamental picture is just as compelling. First, we'll cover the latest news driving this pair, and then we'll jump into a multi-time frame analysis of the charts to see what the price action is telling us. Let's start with the fundamental drivers, because there's a real tug-of-war happening here. On one side, we have a weakening Swiss franc. Recent reports from about a week ago highlighted that Switzerland's export-heavy economy has contracted for the first time in over 2 years. This, combined with market expectations that the Swiss National Bank will keep interest rates at zero in December, is putting significant downward pressure on the franc. On the other side of the pair, the US dollar has been showing strength. This is largely due to fading expectations of a Federal Reserve rate cut, as markets are pricing in a more hawkish stance from the US Central Bank. However, it's not all one-sided for the dollar. Some recent data, like the ADP report showing a drop in private employment, hints at a cooling US labor market, which could weigh on the currency. Adding another layer of complexity, news from mid-November suggested that US-Swiss tariff relief talks were progressing. This news initially gave the Swiss franc a boost, causing the USDCHF pair to dip below the key 0.80 level around November 11th. So, we have a fundamentally weak franc due to economic data, a strong dollar due to Fed policy, but potential upside for the franc from trade news. This complex backdrop is what's making the price action so critical to watch right now. Now, let's bring up the daily chart to get the big picture. Looking back over the past year and a half, we can see the pair has been in a major downtrend from the highs above 0.91 in early 2025. The price action has been incredibly volatile, with massive downside wicks on several occasions, like the one here on June 17th that briefly took the price below 0.76 before snapping back. This indicates periods of intense selling pressure or perhaps news-driven flash crashes. The price carved out a significant bottom during the summer, testing the area below 0.80 multiple times. After a low in mid-September around 0.785, we saw a recovery that stalled out, leading to another test of the lows. Now let's switch to the 1-hour chart and zoom in on the action from the past 2 weeks, because this is where the story gets really interesting. Here on November 11th, you can see this sharp drop, which corresponds directly with that news about the tariff relief talks boosting the franc. The price fell decisively below the 0.80 handle, bottoming out a few days later around the 0.7875 level on November 14th. But look at what happened next. From that low, the pair has been in a very aggressive and structured uptrend. This strong reversal aligns perfectly with the more dominant news flow about a slowing Swiss economy and a strengthening US dollar. We can see a pattern of higher highs and higher lows, forming a clear upward channel. The price broke back above the 0.80 psychological level on November 18th and has continued to climb since. This shows a clear shift in momentum from bearish to bullish in the short term. Let's go back to the daily chart to put this recent rally into context and identify our key levels. The price is currently trading around 0.808, just off the recent highs. The first major resistance level to watch is right around the 0.81 to 0.812 area. This area acted as consolidation and resistance back in August, and also lines up with highs from early November. A decisive break and close above this zone would be a very strong bullish confirmation. It would suggest that the recent reversal is not just a bounce, but the start of a new, larger uptrend. To the downside, our first key support level is now the psychological 0.80 mark. This level was previously resistance and is now expected to act as a floor. A breakback below 0.80 would be a warning sign for bulls. Below that, we have the lower boundary of the recent channel, currently around 0.796. The ultimate short-term support, however, is the low of this entire move, down at 0.7875. As long as the price remains above this level, the short to medium-term bullish structure remains intact. Finally, let's take a quick look at the 15-minute chart for the most immediate price action. As we can see, after the strong push higher on November 21st, the market has entered a period of consolidation. The price is coiling in a tight range, which often precedes the next directional move. We're seeing it hover just below the 0.809 level. Traders will be watching for either a breakout to the upside to challenge that 0.81 resistance, or a breakdown from this consolidation, which could signal a pullback towards the 0.80 support. So, to recap everything we've discussed, the fundamental picture is mixed, but currently favors dollar strength. The chart has seen a powerful reversal from the 0.7875 lows. Key resistance is at 0.81 to 0.812. Key support levels are 0.80, followed by the major low at 0.7875. Now for our unbiased predictions. Given the strong momentum and the prevailing fundamental narrative, I believe there's a 60% probability that we see an attempt to break the 0.812 resistance in the coming days or weeks. A strong daily close above this level, especially on high volume, would reinforce this bullish outlook, potentially opening the door to targets around 0.825 and higher. On the other hand, there is a 40% probability of a bearish scenario. This could be triggered by positive news for the franc, like a concrete tariff deal or significantly weak U.S. economic data. If the price fails to break resistance and instead closes back below the 0.80 support level, it would suggest the rally has run out of steam, and we could see a retest of the 0.79 area. The main things to watch for will be any news on those U.S.-Swiss trade talks and the upcoming U.S. non-farm payrolls report, which will be a huge market mover. And that wraps up our analysis of USDCHF. Remember, this is for informational purposes only and should not be considered financial advice. The Forex market is highly volatile, and you should always do your own research and consult with a financial professional before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next video.